Day trading as a beginner can be complicated. I'm going to go ahead and reveal all the strategies that beginners should follow down to a T that I've used as well for many years to go ahead and be very successful trading, whether it's on the side while I run other businesses or even if you have a job, whatever it is. This video will help you tremendously. And towards the end, I'm going to reveal 3 of the top strategies that you should be using and most importantly, how to implement them. So let's get right into it. One thing that we absolutely love to do here is use different tools such as TradingView, where it's just a charting platform. And again, we also leverage different artificial AI bots that trade for us now based on algorithms that are preset. So again, I'm going to teach you everything you need to know, the skills and pretty much everything from A to Z throughout this entire video. So make sure you watch to the very end. Number 1 is actually having capital on hand or save money in order to go ahead and create a live account. Now we're going to talk about demo and live accounts very shortly, but what I want to say is that if you don't have the capital to get started trading on a live, first off, that's okay. But second, I would always recommend anybody go out there and save up enough capital, bare minimum of at least 1,000 or more. So I would suggest the or more part. So, work a job, save up, maybe sell some things around the house, whatever it is. So when I first got started, I actually ended up selling, I had 2 iPhones and I sold one when I first got started years ago and started saving up, started working. My first ever job was at a Burger King. And again, I was working relentlessly to go and save up so I can go ahead and actually get started with not only trading, multiple different businesses I want to get into. The whole point here is that you want to make sure you have a certain amount that you set to the side that you can go ahead and not be afraid if it's essentially lost if you're trying this by yourself, trading by yourself and just learning. But that's why we also go ahead and leverage, which is very important. Most people want to go right into just trading on a live account with a certain broker, whatever it is. And that's not necessarily what you should do. And you should learn from the failures that I faced and millions of other people have faced as well. What is that exactly? Well, it's essentially trading on a live account. Now, before we dive into talking about live accounts and demo accounts, the other thing I would recommend is, well, I had a really bad spending habit a long time ago of buying pretty much anything that I would recommend now and deem now as useless. There were so many things I was frivolously spending my money on that I could have been saving in that time period to exponentially get results a lot faster from this learning curve as well. One of the most important things is to actually find a mentor, something or somebody that you can follow. Now, here's what I will tell you is that there's so many mentors out there, mentors, coaches, whatever you want to call it, but there's nothing more impressive and nothing that will stick with you more than actually going out there and having real experience yourself. The long and short of it is that you should have a base to follow. Again, like I said, you can follow whoever you want. You don't have to follow me. You don't have to follow anybody. You can do it yourself, which is what I would suggest, but you need a base there. There's tons of signal groups out there. I don't ever recommend signal groups because at the end of the day, they're designed to make money for the people running the signals. And it's quite frankly not set up for anybody to be profitable long-term. But again, do some signal groups work? Sure. Do they work long-term? Maybe some are long-term, but by the time the signal is sent out, you can possibly miss out on a great opportunity because maybe you're a few minutes late or a few hours late into the entry of a trade. So I would recommend any beginner staying away from any signals group. But what I would recommend is if you're gonna go to those signal groups and whatnot, then I would recommend looking at the signals and seeing exactly the setups that they're trying to convey to you, how it all works and why they're getting that particular trade, and then reverse engineer if it's profitable for them or not and why. That's very important because you've probably heard this before. The fastest way to success is by modeling off of others or simply just paying attention because success leaves clues, right? So historically, if you ever wanted to go and partake in anything or build anything, learn something, there's somebody out there who has gone through the troubles of learning and documenting as well. And you just have to reverse engineer what is already out there for free. So that's why I believe that certain universities and college curriculums are completely useless because all the information is freely available for anybody to learn. There's no better ally on your side than experience and actually doing it yourself firsthand. Next, I mentioned this before, is that you want to learn strategies and use something like TradingView that, again, is pretty much the industry standard for anything, whether it's crypto, Forex, stocks. It'll show you everything when it comes to charting. Now, again, depending on the broker you use, they might have a chart that you can use natively inside of the app. Like Thinkorswim, they have their own application that has their own charts. You can chart wherever, but I would always recommend going ahead and using TradingView or a tool like it that has indicators and everything that you need in order to make informed decisions. And again, like I said, experience is key here. So learning to maneuver and work around an actual platform for charting is very important and very crucial. But first thing is first is you definitely want to learn the strategies and get familiar with them from the very start. Next, demo accounts. I would always recommend setting yourself up first with demo accounts and testing and learning your strategies on the demo accounts. Why? Is because, well, you can just use paper money rather than real money, and it works as kind of a win for you as you're saving up more capital and learning at the same time. When you're ready to go to a live account, well, you'll have the strategy down pat that you've been working on and perfecting, whether it's for weeks or months or years, however long it takes you, it doesn't really matter. What I would highly recommend is don't go and try doing it by yourself immediately on a live account when you're going and learning. That's where I had my big mistake, was that I went right to a live account and said, this is going to be easy. And well, it wasn't as easy as I thought in the very beginning. So I did paper trade for a little bit, and then I realized that paper trading, and this is just my experience, is that I figured out that paper trading for myself didn't have the same impact as it did using real money. So why is that? Is because when I was using my real money, I was more cautious of only taking trades that I was confident in with my setups. So if I have an account, a paper trading, a demo account with $100,000 in fake money, well, I would be like, okay, whatever, it's not real, it's not my money, etc. I'll just go ahead and take whatever works or take whatever I see. And that doesn't allow myself, and as a beginner, it doesn't allow you to properly train your brain to psychologically understand that, okay, I'm not just gonna take trades because they're there. I'm not gonna take trades because I can. So you wanna be confident in your setups. You wanna be confident when you take these trades. It's very beneficial for you long term. And as a beginner, starting off programming that into your brain from the very start is very powerful. Next, and this is something I absolutely love, I'm a huge note taker. I have notes everywhere. I have books everywhere. Even behind me over here, I have books that I take notes in. My entire home is scattered with notepads, notebooks. Because why? Well, I reflect every day. I write down journals, kind of what I've learned, etc. And that particular habit was formed because every single day when I first started to learn how to trade, I would go in and document my wins and my losses and why they were wins and why they were losses. Is because, like I keep reinforcing, is that experience and actually doing is the best form to learn. So that's how it's really going to set in with you and really sink in, is that by doing and reflecting on why a setup didn't work, why a trade went into the red, why you didn't win, and then also figuring out why you did win. So if you can break it down and understand fully why it worked, well, or why it didn't work, is very beneficial for you. And starting off that habit from the very start is great long term. You should always be reflecting on why things worked and why they didn't, because that's only going to help you make informed decisions in the future to come. When you have a winner, most people get too attached to that green P&L that's constantly going up when you have a winner. Now, here's the thing, just as fast as a trade can swing to the upside and be profitable, it can also swing back down to the downside just as fast. Now, remember, you can go into the red much faster given that there are fees and commissions on different brokerages, and technically every single trade you open up, you actually start off in the red due to those fees. So when it's going against you, your trade's going against you, well, quite frankly, it can go against you really bad. So not only do some brokers have a fee for opening a trade, they also have a fee for closing the trade. Now imagine taking a loss on opening, taking a loss on closing, and also taking a loss in the actual trade. So again, this is one of those factors that you'll really grasp when you're running with a live account as well. So when it comes down to it, you want to go ahead and take profits on what you feel comfortable with when you have winners. So you always want to set a mental take profit or a manual take profit where you say, okay, I just want to make 10% today. And again, same thing with drawdowns. If you tell yourself the max I'm willing to lose on a single day is 10%, but ideally I want to hit 10% profit every day? Well, there you go. So make sure you follow those every single day when you're trading. Don't get emotional and don't say, okay, I'm gonna go ahead and revenge trade. I'm going to trade because I'm down 10%. Thus, you need to be up 20% in order to go ahead and even be at your goal. Long story short is that when you get your emotions involved, when you start negatively trading because you're down, it's not going to end well. So set mental or manual take profits on what you're comfortable with and what you're okay with either losing and winning every single day. And if it goes against you, don't go ahead, revenge trade. Just close your computer, reflect, and say, okay, how can I be different tomorrow? And again, there's a lot of factors in here, but like I said, journaling and reflecting on what didn't work is very key. There's another thing we have to discuss, end goals. So every single month, every single year, you should set goals for yourself. This is what I do. As a matter of fact, let me tell you how I'm able to successfully trade every single year when I'm actually manually trading. The thing is that every single year I set a target goal on a ROI on the capital that I have allocated into whatever the investment is. In this case, it comes down to trading. So I say, okay, I'm gonna put, let's just say $100,000 in. I want to go ahead and hit at least 50% on my capital allocated. So I want at the end of the year, $150,000 in my account as the total balance for the year. From there, what I do is I reverse engineer how I'm going to get to that 50%. I break it down every quarter, and then from each quarter of the year, I break it down month to month to the current month. Then I go backwards. I say, okay, for simplicity purposes, let's take 120%. Every single month, I would need to hit 10% on the initial 100K, right? So I would work backwards on how can I get 10% every single month consistently, not compounded on the base capital. So even though it compounds month over month, it gives you a lot of leeway and a lot of room as well in order to be able to make a little bit more mistakes as you go on. But here's the thing is that I work backwards saying, okay, 10% every single month, which means, every quarter, it would be what? It'd be 30%, 3, 6, 9, 12. Yep. So it'd be 30% every single quarter, 10% a month, go to weekly, go to daily, etc. Now, when you break it down like that, it's actually a lot more easy to attain smaller percentage gains every single day to achieve those bigger goals long term. And one of the things that I will say is that you have to be very vigilant when it comes to news. For example, today the CPI data inflation came out and it was 7.1% the last time it was announced. However, today it's 6.5%. So it's going down, which means that market volatility is insane. So we can see right over here, this is when the CPI information came out, CPI data came out, and we can see the volatility in the hourly candles alone. So if we're just taking a look from the top of this wick over here to the very next, or even the same hour, I should say, we could see that it went 27.92% from the top of the wick to the bottom of the wick. And again, it didn't close at negative 28% basically. But again, that's how volatile it is when certain pieces of news come out. So either you learn to trade with the news, and this happens over time, you learn what certain pieces of news will do to the market, so you prep yourself. And again, that only comes when you actually have experience. So again, just make sure you prep yourself and understand news. One of the key things that we do now is we actually utilize artificial intelligence, AI, trading algorithms, basically bots. They're not EAs, they're not expert advisors, nothing like that. So again, I'm not going to dive too much into that. If you want to learn more, there's links in the description. It's actually it's very lucrative. It's very passive. So again, that's kind of what we utilize now since the ROI is absolutely incredible. And there's also a Telegram down below. You can join the channel and just kind of follow everything every single day or whenever we put out updates. So again, I promised you the 3 most vital aspects when it comes as a beginner to getting started trading. I'm going to go over them very quickly because these are 3 crucial ones. Number 1 is assess your trades. Like I said, always reflect. Number 2 is learn first and always have a North Star metric or somebody that you're following or different metrics and KPIs, key performance indicators that you want to hit, and have those goals set as well. And third, this is huge, and a video that I can make by itself is never over leverage. Leverage and margin are the keys to destruction. Long term, short term, even Warren Buffett and Charlie Munger go ahead and say that leverage is the worst thing that anybody can utilize. However, is it useful? Certain situations, yes, but you need to be confident with your trade setups, and you need to be confident with exactly what you're trying to accomplish, know your goals, etc. So if this helped you, please consider subscribing and smash the like button for more content like this, and take a look in the description for more training, for more information, and join us in Telegram as well, and learn about the AI algorithm bots that we're using in the description down below as well. They're super powerful, but again, it's all free training for you to go ahead and utilize. And that's pretty much it. Subscribe, smash the like button, and I'll see you in the very next video.